Hello, chart watchers and DecisionPoint faithful. Welcome to this Thursday morning, June 4th DecisionPoint show with your hosts, Carl and Erin Swenlin. For those of you joining us for the first time today, we welcome you to the show and hope you will join us next week on Thursday morning when we air our program. Right now we are recording. This is as of Wednesday afternoon. So all of our charts and our indicators are going to be up to date for the end of June 3rd. So let's go ahead and get started and see what's been going on in the market. Dad, I'm going to welcome you as I get ready to do this agenda. Everything going good for you?
Yes, it is.
We're trying not to melt here. I think it's going to be 100 if it isn't already.
That's true, yeah.
All right, so we're going to look at what the market looks like tonight, June 3rd. We'll cover, Carl's going to talk about a historical comparison regarding what's going on in the market right now versus, we'll talk about that later. We'll look at our decision point indicators, and Carl has his earnings chart that he'll be talking about. And then I'm going to go over some of our sector signal changes. I thought it might be a good time to look at our sector charts and see what is going on with them. And then at the end, of course, I will give you my DP Diamond of the Week. It is from my report that I wrote on Tuesday, June 2nd. So if you are interested in getting all of the diamonds of the week, go to DecisionPoint.com and check out our DP Diamonds report. And that's where you're going to get the stock picks that I throw at you, 15 of them every week. So welcome you to join. And so we will go ahead and I'll give you one of those diamonds of the week so you can see what I do in that report. All right, but let's go ahead and get started. We have had some signal changes that I do want to talk about right now. And the main one I'm going to talk about that came in today is a long-term trend model buy signal for the S&P 100. This would be considered a golden cross. The 50 crossed above the 200-day EMA, and so that gives us a long-term trend model buy signal. And so as you can see, we still have a couple of those long-term signals still waiting. The S&P 500 is somewhat close to getting its long-term trend model golden cross buy signal. And the Dow is still pretty far away. So I don't know that we're going to see that at least for another week or two. And that will really depend on if price can stay above that 200-day EMA. Currently, we do see that the Nasdaq 100 has all green on it. This means that we have the short-term trend model, 520-day EMA positive crossover. This is your silver cross, and this is your golden cross. These down here are PMO signals. The short-term is from the daily chart. The midterm is from our weekly chart, and the long-term one is from the monthly chart. So we track those crossovers for you so that you get momentum in all three time frames. And as you can see, NASDAQ 100 is humming along, and the laggards right now are the S&P 500 and the Dow Industrials. We did see at the end of last week some new midterm PMO positive crossovers. So we did get a buy signal on the S&P 100. Last week, we also got the Dow Jones, got a midterm PMO positive crossover on that weekly chart. And then we also added another one here for the S&P 500. The weekly PMO had a positive crossover. So lots going on these decision point scoreboards. They do tend to lag somewhat because we are going off of EMA crossovers, but I think they do give you a pretty good handle on what is going on in these four major indexes. Next up is our decision point sector scoreboard. And like I said, I'll talk about these signal changes a little bit more later in the program. But today, consumer discretionary had a long-term trend model buy signal or a golden cross. So that is where that came from. And then the financials finally joined the rest of the party with a intermediate term trend model buy signal or silver cross for the financials and also for XLU. We got a buy signal on that one as well. So we'll go ahead and I'm going to actually look at all of the sector charts just to give you a feel for what's going on within each area currently with the market. All right, so let's go ahead and look at some charts. And I'm going to actually start us off here with our 5-month candlestick chart. Let me make it just a little bit bigger so everybody can see it real well. All right. So Dad, we've been looking at this rising wedge forming as price continues to rally out of what we were looking at as a zone of resistance. It does carry back, but this is a 5-month chart. And the market just does not seem to be interested in moving lower. And, you know, what are your thoughts right now on this rising wedge? Do you think we're going to end up, it looks like we're trying to poke out of the top already. What are you thinking about that rising wedge?
Well, I was going to address this. Notice in the last couple of weeks, things have been really tightened up, and they're very similar to what we had back just before the crash. And it occurred to me, even though there's still a lot choppier here currently than we were back then, this is the kind of market we're getting. It's just really tight and pushing upward. And
Right.
Can you go to the 1-year chart?
I can, but just before we do that, I just want to point out the VIX. You know, we're tightening up our trading range, and the VIX is finally starting to squeeze a bit closer than we've seen it. We had obviously very wide Bollinger Bands before, and now we're starting to see that tighten up as well as the volatility is starting to slow down a little bit. But, you know, hey, we had a 1.33% move to the upside. So that used to be considered really an amazing move, but now with all of these up and downs with such high percentages, but it does look like we might be slowing that down a little bit. Here is our 1-year chart. And again, let me make it a little bit bigger. There we go.
Yeah, I was talking about the price action prior to the crash, but you look how that goes back a couple of months at least, actually 3 or 4 months. Mm-hmm. It's real tight and very persistent upward. I thought, I was thinking, you know, the way it's acting, this seems familiar. I said, yeah, just like it was some months before right up to the crash. So yeah. I'm not implying that there's a crash coming. I have no idea at this point because it's not paying any attention to my indicators.
Right. Well, and a lot of our indicators, though, have been really bullish. And, you know, there's been a discussion about, you know, the Fed throwing a lot of money at the stock market and that maybe a lot of this is somewhat inflated. But at this point, we have to just go with what the charts are telling us. I mean, that's what I pay attention to.
The big problem is that overbought doesn't mean much when you got a market that's acting like this.
Right. Absolutely. All right. So did you want to show your chart? Or are we good with this one?
We'll go with that one.
Okay. That sounds good. All right. So let's go ahead and take a peek at some of our indicators here. I'm going to look at our Swenlin trading oscillators. This is really the indicator that I think has been performing very well and giving us a really good idea of what's going on in the market, and following its direction has been pretty consistent. I mean, you can see here right at that top, right before that, these indicators had already topped and turned down. We continue to see these divergences. Now, of course, in this piece of territory here in the last, I guess, 3 weeks to a month, we're getting rising bottoms, and those are confirmations. They're not, you know, they just tell us that the indicators are going in the right direction with price. Price is going with the indicators. But I mean, it's useful information. What we'll want to watch very closely is right here. I'm looking at that STOV, and if we get a top tomorrow, that would give us some declining tops going on. We already see the percent of stocks above their 20-day EMA is already getting very overbought. And we saw last time we got really overbought like this, it did result in a decline. Now, at the same time, I know we talk about it a lot, Dad, too, is that overbought conditions can persist when we're looking at a bullish market like we are. But I think it's still important to keep an eye on these overbought conditions because they could rear their ugly head at us. All right, so those were the only ones I was going to show. I do want to show you one other thing. It just came on my radar that I wanted to talk about. We have DecisionPoint Chart Pack with StockCharts.com, where you can download all of our market indicators, sentiment, all of that into your very own chart lists. And at this point, we're probably going to be starting to charge for this in the near future. So I highly recommend you download it now if you are a StockCharts member, extra or above. Just go up to right here with, here we go, right up here, and you can go and find those chart packs to manage those and download them. But at this point, we're probably going to start charging for them in the near future. I'm working that all out right now. But I wanted to show you the chart list for the Swenlin trading oscillators because, like I said, they have been really helpful on telling us what's going on. And I did notice some really interesting things here. For example, this is the NYSE Composite Index. And as you can see, we have declining tops right now on the STOB. And we could very well see declining tops on the Swenlin trading oscillator, the volume component of that particular oscillator. So there's some problems going on under the surface, and I was looking also at mid caps and the S&P 600, and look at the difference in these STOs. They're headed down. So we've got mid caps that are showing a bearish bias now with these indicators. And then if you look at the S&P 600, you know, really it's just been heading straight down. We did get a nice move today, but overall these indicators have updated, and you can see that the STOB is still traveling downward for the S&P 600. So just, you know, food for thought here. And I think, let me see what other ones might be interesting. Let's look at, remember the Nasdaq had all buy signals? And again, different looking STOs, different Swenlin trading oscillators. You can see rising tops and rising bottoms right here on the STOB. And right now, we did have some declining tops here though, or declining bottoms, I should say, on the volume oscillator, but now we've shot right back up. And these aren't particularly, I mean, they're somewhat overbought, but they're not in, you know, seriously overbought territory. So can still see some good stuff going on here in the technology space, and then Nasdaq 100. You know, you've got that PMO bottom above the signal line. All of those are considered, you know, good signs. Of course, a flattening PMO that might be topping isn't what we really want to see. But I thought it would be interesting to look at those Swenlin trading oscillators for some of these other indexes, just to give you a feel for the differences. And the main differences, I would say, are that the composite is a problem. Let's see if we look at this one. It's nice and big. Yep. This one is a problem. And of course, as I mentioned, the S&P 400 is a problem, and the S&P 600 has a problem on those Swenlin trading oscillators. You're not usually going to be able to maintain a nice rally if not everybody is participating. So this is just something to keep an eye on. But other than that, I have to say most of the indicators for the SPY that I've been watching in our DecisionPoint alert report continue to be quite bullish. So at this point, I'm just holding my breath and waiting to see when they're going to top at this point. But yeah, I'll be writing about that every day. Carl will be going over it on Fridays in our DecisionPoint alert, one of our premier reports on DecisionPoint.com. So highly recommend you go check out the website so we can keep doing what we're doing.
Right.
All right. Were there some extra charts you wanted to look at? Otherwise, we can go delve into the.
I got some stuff.
Yeah, let's go ahead and pass it to you. We've looked at my screen long enough.
One of the things today, it's hard to say sometimes, but it's pretty sure that I'm pretty sure it was because of the employment report. They were expecting 9 million newly unemployed, and it was only 2.7 million. So it was quite a lot better than they had expected. And I think that has a lot to do with the. Of course, it's still going to suck, but
yeah,
it's just you know, it's some good news.
Yes,
Okay.
which we could
I
use.
did put an arrow down here on the VIX because it's pretty close to that upper band, and I'm thinking it is overbought.
Yeah, and I was noticing in the thumbnail there, I don't think I pointed out when we were looking at it, but the price in the thumbnail, it is starting to look a little bit parabolic, and
Yes, it's
that's
true
always a problem.
in this scale.
Yeah.
Okay, I've got the earnings chart. This is updated as of the end of May, and primarily this is what it looked like uh, April 22nd. Notice where here's the overbought 20 PE of 20, fair value. I said overvalued 20 PE, 15 PE fair value, and undervalued at 10 PE. So now this is where it's projected to be, or it was projected to be at the end of this year. And now this is what it's projecting based on, we've got over 97% of the companies in the S&P have reported. So this is not looking great. And the PE based on forward earnings, which is what people like to do all the time. In this case, PE currently is 22, roughly around 22, but based on forward earnings, it's 35. So it's way, way up there.
Yes.
This is one I wanted to get a look at. This was giving me negative divergences for a long time, but
Yes.
it's the, well, this one hit a record. I don't know if that's a record, but it's right up there.
Yeah. I don't think,
So
like I said, we had 100% back there on the percent above the 20-day EMA, I think, for a little bit. That was, and I did look back in history, we hadn't ever had 100%.
right. And then let's just inspect and see when it gets up at these levels. You still can have a time to go before it finally curls over. So, except on here, you didn't get any warning.
Right.
But here you hit the high, and then you had about a month before it rolled over. So
We'll be watching vigilantly.
and this is the one that gave us that buying impulse, really a strong impulse. When you see something like that, it is a bullish sign, and so we're working off that now.
Mm-hmm. Heading back up again.
Okay, and let's see. I think that. Yeah, I think that's.
Oh, you want to look at, I see you have CRE. I know it was one of the, I think it was the second best in our ETF tracker that we use.
Regional banks, yeah. Yeah, I forget the top three. The bottom three were gold miners, and
Yes.
silver. It was the precious metals anyway. Yeah, it's looking better, and home builders. I always like to keep an eye on them. They're picking up.
Absolutely.
And
Building new homes, I guess. I don't know.
retail.
Yes. Retail's been a bright spot.
Okay.
All righty. Let me go ahead and grab it, and we'll start looking at some of our sector charts that I think will be interesting. All right. So these are the sector charts that we do have on our website for our members to look at. You're getting a sneak peek of what we have there, but I think it is important to kind of get a feel for what each of these indexes, or I'm sorry, these sectors are doing in regards to some of uh, the important indicators that we use with it. For example, the Silver Cross Index and the Golden Cross Index down here. Let me see if I can fix the height and width of these really quickly, and whoops, and then we can talk a little bit more. But it's been really interesting watching the sector rotation, and it's natural, it's going to always happen. I've been watching, what is in favor and what isn't in favor. Let me go here and I'm gonna apply this to all. All right, now we'll have big ones for everybody to look at. Okay, so we're going to start off here with XLC, and you can see this one has already had its silver cross quite a while ago in early May, and we got in the thumbnail, you can see it a little bit more clearly, the 50-200 golden cross. And at this point, we're watching this rising trend. We did bust out of it for a little while, but we're back within it. Looks like it wants to bust again. I might have to redraw these and see what this is shaping up to be here as we get that congestion near the top of this rising trend channel. But one of the things to note is of these indicators, I think all of them look pretty good, Dan, except for the fact that we're losing the stocks above their 20-day EMA.
Right.
Yeah, feel free to just bust in here. So consumer discretionary, this is the one that just got its golden cross that we had on our sector scoreboard for you. And, I'm looking at this chart, and if I go in here, actually I can do this with our inspect tool here. I'm just looking at where we were at the bull market high, and we're getting really, really close to those all-time highs again for consumer discretionary, which is interesting. I know that I've written about restaurants and bars has been a bright spot, and I wrote about that in diamonds. You pointed out, I think we were looking at, what were we looking at? The retailers, and retailers have been really performing well. What I would be interested in looking at is maybe trying to find some beat down sectors that are starting to wake up. I think consumer staples might be one of those. You've gotten the breakout from that wedge that we had back here. There we go. Price has gotten up.
And you notice that the stocks above 20 EMA is turned down. So that's a short-term non-confirmation.
Right, exactly. We don't have, again, we really want to see those tops, declining tops, but just seeing an indicator turning down like this tells you these are the amount of stocks where their price is sitting above the green 20-day EMA. And typically, I don't know about most of you, but when I buy a stock, I'm generally looking for stocks that are above their 20-day EMA. And the fact that we're seeing some of these components losing those support levels at the 20-day EMA is still something to be concerned about, even if we don't have declining tops per se. XLE, this one woke up for sure. It actually managed to cover this gap. Typically when you get those big gaps covered, you're going to see a continuation on price. But look, we've got the same problem.
Yeah.
With the 20-day EMA, seeing stocks that are falling below it. So to me, that says that, we have some great internals here, but when you start again, we're losing participation. Not everybody is getting the benefits of this rally that we're seeing in energy.
That same problem was on the XLC as well.
Yes.
We can get a chance to mention it.
Yep. XLF is the one we got a new signal change on here. You can see that 20 above the 50, that silver cross, nice breakout here from what I think was a rising trend channel, not quite sure, but we did get that breakout. Nice gap up here, could be a breakaway gap, but honestly, when I look at this, I would consider this the breakaway gap, probably a continuation gap, and I I think this one is just going to be a regular, just a gap. So you can have various different kinds of gaps. The one thing I find unfortunate, Dad, is that you don't know what kind of gap you have usually until it actually it it
Yeah.
it shows itself before you can do anything about it.
Wait,
Financials, yes,
before you go, note the OBV is not confirming.
that's absolutely right. You
It
can see
hasn't
right now,
popped yet, but at this point, it's not confirming. Something
right?
to watch.
So there are these under the surface issues, but overall, I mean, you're looking at these sector charts, the silver cross index, the golden cross index. Although I have to say with this one, it doesn't look quite as good in the healthcare. Although, oh no, you know what? These are all. Oh, I think when I did that to make them all big, it put the same indicator on all of the charts. So we haven't been looking at the right indicators in some of these. But all of them are starting to fall. So what I need to find here is where we were, healthcare. There we go. All right. So at this one, I'm looking at mostly flat to somewhat declining tops on that OBV, yet the corresponding price tops are rising significantly. So I would look at that as a possible negative divergence there with the 20-day EMA again. We're seeing that.
I don't find that those two tops, that's very significant. But the fact that the price moved higher and the stocks above 20 EMA moved lower is more significant. And you
Yes.
know, 50 EMA stocks above 50 are moving down, edging down.
Right. And this has certainly been one of the brighter spots during the coronavirus. I suspect we're still going to see some action in there, but I don't, from looking at this, we may not have full participation. All right, industrials, XLI, you can see we had just gotten that signal last week, the 2050 silver cross. These indicators don't look too bad for the industrials at this point. And we're just about out of time, so I'm just going to flip through these rather quickly. Here's some declining tops we are seeing on the stocks above their 50-day EMA for materials. But again, materials have really started to wake up, and one of the highlighted sectors was in, our industry groups was in paper. All right, so I'm running out of time here. All of, if you are interested in seeing these exact same charts, our DecisionPoint.com members have access to it on our website. I'll show you that real quick, and then I'm going to give you my quick diamond of the week. So here is our website right here. We go to the blogs and links pages. Right here is where you'll find that sector chart list, and you do have to be a member to get to it, but you'll be able to see all of these charts that I just went through. All right, diamond of the week. My diamond of the week is Rite Aid. And full disclosure, I do own this one. I bought it a while back. It's been performing quite well for me. Doesn't look like much here on the chart, but the percentages, for example, just really quickly, just from the current price level to that top right there from back in May, that's a 25% gain if you got to that top. So it doesn't look like much here, but that's because we're looking at percentages that are very high. But I like this chart. We haven't executed this ascending wedge, would like to see that, but we did get a PMO buy signal today. You can see confirming action on the OBV, and the RSI has just now peaked above 50. So this is my stock, the diamond of the week, and hope you take a look at that. All right, that's pretty much all we have for today. I do want to remind you we're on Thursday mornings. Happy trading.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.